This second, your company is spending money. Here, here, and here, even here. And you need to stay compliant when you are doing this and this, but maybe not this. But it's not getting any easier. Uncertainty, complexity. What used to take 10 years now must be done in one. What if you could capture data and apply policy every time money was spent, with the best systems for each category and the largest networks and platforms, and then bring all that data into one unified view? That is intelligent spend management from SAP.
Good morning, everyone, and a very warm welcome to all of you. I am Prabjot Minhas, and I manage marketing for SAP Concur for the Indian region. I would like to thank you for joining us today for the virtual summit on the path to intelligent spend management. Today, finance, procurement, supply chain, and IT leaders are struggling to manage enterprise spend as regulatory requirements keep changing, data and processes are fragmented, and buying decisions get pushed out to more employees, especially during the current environment. According to an ITC survey, 61% of companies are still using fragmented applications to manage different types of spending. The result is a lack of spend visibility and control across finance, procurement, and supply chain. It is not surprising then that 90% of leaders say their companies could increase spend control, and 87% are interested in investing in a unified spend management platform. As a leader, you're in a position to lead the way to better spend management. We have a unique opportunity today to hear just how we can bridge the gaps. What road do we embark on immediately to help us tide over the current process gaps and inefficiencies? We have been fortunate to get participation from some amazing speakers for our summit today, and I hope that you find the sessions insightful and beneficial. Our intent is to help you gain a holistic approach to enable you to orchestrate and plan for spending and cash flow management across various categories to increase business agility. Before I introduce our esteemed speakers, I would like to take a moment to make some housekeeping announcements and take you through the functionality of this platform. Your participation is important all through the session, so we hope that you stay on. You will see a control panel on the right-hand side of your screen. The orange button on the top right side can be used to collapse or expand the control panel. If you have any questions for our speakers, please enter the same in the question window or on your control panel. Your queries will be answered at the end of the session, or we will be sure to follow up with you on it later. We have everyone on mute throughout the session to avoid any audio disturbances that may distract other users from listening to the webinar. Now that I have that covered, I would like to get started by introducing our keynote speaker for today, Mr. Ramakrishnan Venkataraman, Chief Financial Officer at Tata Consultancy Services. It is indeed a pleasure and honor to have you here with us today. Over to Mr. Ramakrishnan.
Good morning, everyone. Thank you, Prabjot. Thank you, SAP, for having me today at this virtual summit to share perspectives. All of us would agree that the last few weeks and months have been extraordinary and unprecedented. The disruption caused by the pandemic has been sudden, global in nature, and with severe impact to lives and economies. References are made to the Spanish flu pandemic in the early part of the 20th century or to the upheaval caused by the two great wars. However, none of us are likely to have experienced any of these events firsthand. The global financial crisis of 2008-9 is perhaps the one we can all relate to, which had a global impact, but of a very different flavor and intensity. The current pandemic has forced economies across the world to lock down completely for varying periods of time. Some sectors, such as travel, tourism, and hospitality, have had complete loss of business for some time. Other sectors, such as non-essential retail, manufacturing, have also been severely impacted. Sectors such as essential retail in some formats, healthcare and pharma, utilities, media and communications, etc., have been operating, but at varying levels of activity. The financial sector, banks, insurance, stock markets, and other markets have been operational, but with constraints such as reduced hours of operation, etc. Government activities around the world have carried on, with priority given to managing the pandemic. So, what are the key implications from this tremendous disruption? Firstly, businesses have had to immediately manage the here and now. Lockdowns and closure of airports, etc., have been imposed with very little notice in most countries. So, how does, as a business, cope with the sudden closure of factories, offices, and other places of work? How do you manage commitments and expectations from various stakeholders, including your customers, employees, suppliers, lenders, regulators, and community participants? Secondly, as we are witnessing in the last few days, governments are slowly relaxing the lockdown norms and allowing economies to start opening up. This is not going to be like a light bulb being switched on. It will be more like a knob or a dial being slowly and perhaps in fits and starts turned to bring things back to normal. This may take several months. This is the recovery phase. The actions required by businesses during this phase will be quite different from the earlier phase of here and now, and I will talk about that shortly. Thirdly, businesses have to plan for what happens after the recovery. They have to grow and thrive, since that is the primary objective of a commercial enterprise. They can fulfill many of their societal obligations only if they are a functioning and viable entity. This I would call the revival phase. Again, the actions required in this phase would be quite different from the earlier phases. However, the planning has to happen now. One cannot wait for the recovery phase to gain steam and mature. Many decisions, especially on spend management, have to be made now. So let us see what would be the defining characteristics of organizations which would be able to successfully navigate all these phases. We will also see what the enablers are. We'll also see, as finance professionals and leaders, how does one help, influence, and manage these changes. First is resilience. The ability of the business to bounce back into shape or recover quickly depicts resilience. It is like elastic, being stretched and returning to its normal size after being let go. The present disruption is and will stretch every organization significantly. How do you get back to normal? First and foremost are your employees. They need to be safe. In the current context, it has meant that employees have to be enabled to work outside the office in many sectors, deliver services to clients, both internal and external, without loss of efficiency and any compromise in quality and regulatory standards, and also in a secure manner, addressing cyber threats, data privacy breaches, etc. Second is adaptability. This is the ability to change your strategy, behavior, and actions to suit the new situation. Businesses are not going to be the same. Your customers' business and their customers' businesses are not going to be the same. This will apply whether you're in a B2B scenario or a B2C or a B2B2C framework. The time it takes, the trajectory and velocity of the recovery and revival phase will vary by industry and the companies within them. How do we therefore adapt to the new normal, if you will, and ensure that you will grow and thrive? Business models need to be tweaked, new offerings launched, and or new markets targeted without compromising on superior customer experience. The key is customer centricity, to use a cliche. Businesses need to understand what it will take to help the customer, their customer, and their end customers in many cases survive, recover, drive efficiency, and manage costs, and more often than not, how these customers can grow and transform their businesses. In other words, how do you help customers in their resilience and adaptability journeys? Towards this, one needs to understand the key business or economic behaviors that have already been prevalent and has become even more relevant in these times. Number one is mass personalization at scale, or catering to the expectation from customer to get tailor-made or customized attention and experience. We have seen several examples in the online store or the gig economy, whether it is banks or insurance companies or retailers or airlines. Crafting your interaction, offering, or experience to the individual customer becomes important amidst competition and is truly creating a segment of one. Number two are the opportunities available from leveraging the capabilities available in an ecosystem. The key is rapidly tapping into the capabilities and resources of partners and competitors to influence their entire value and supply chain and create new experiences, products, and services for customers. Number three is the adoption of business models that leverage the value from transactions at multiple levels and expand the addressable market and thereby create exponential value. A good example is when you want to buy something online, depending on your customer preferences or depending on your interaction at that point of time, how choices are made available to you so that it expands into multiple business opportunities for the retailer. Number four is the capability to reduce the time between ideation and execution and time to market by embedding a risk-taking mindset. These four business pillars, mass personalization, the ecosystem leveraging, the creating exponential value, and embracing a risk-taking mindset, cut across businesses and industries and are intrinsic to what we call in thesis as Business 4.0. What helps companies succeed with these business pillars? The answer is not far to seek. Technology is the enabler. There are four digital technology pillars, and each one of them is already making significant difference to businesses worldwide. First is adoption of cloud services at scale. Adopting a holistic approach to managing applications, data on the cloud provides greater agility and speed to market for new applications, robust business continuity, especially in these times of huge disruption, and more important, reduce IT costs and optimize resource utilization. The second technology pillar is harnessing the power of data and analytical tools to get intelligent insight and thereby enable creation of customized solutions. Data analytics and data science offers opportunities across sectors, be it healthcare, communications, transportation, retail, social sectors, and governance. Or, as all of us are aware, data-driven decision making and data validation have inherent advantages, and businesses would do well to embed the enabling technologies to be able to do that. The third is automation and use of AI. Technologies that can perform three core tasks, namely self-learning and continuous refinement. Second, recognizing both structured and unstructured data, and based on first understanding what such digital data means, derive insights therefrom and act upon it. Internet of Things, or IoT, with use of often inexpensive sensors placed on machines, equipments, vehicles, etc., enables contactless continuous data collection, which when subjected to analysis, while often on the cloud, brings a whole new set of possibilities to improve efficiency, stakeholder experience, and much more. The fourth is adoption of agile methodologies at scale. Agile is often used in the context of developing technology solutions where continuous iteration of development and testing is enabled. And instead of betting everything on a big bang launch, work is delivered in small but independently useful increments. The same methodology can be adopted across many other facets of problem solving, solutioning, and rapid rollout. This is even more important in the current context. I've spoken about the four economic pillars and the enabling technology pillars, which become the cornerstone for ensuring resilience, becoming more flexible and responsive, and thereby adapt to the new circumstances. These will enable businesses across sectors to recover from the disruption and revive in the new circumstances. As stewards of finance, charged with the responsibility to navigate through these times and help business leaders, it becomes very important for us to understand the power of these business and technology trends and decide on resource allocation, while cost and spend management and cash flow optimization will be very critical in the short and medium term during this widespread disruption of economic activity, demand contraction, and dislocation of supply chains. Businesses need to be able to effectively adapt to the business rebound, capture the demand, and be successful. Trust, empathy, and transparency would be critical in our interactions with various stakeholders, whether it is suppliers and partners, our customers, and above all, our employees. We will have to jointly work through these times. Towards this, the finance professional and teams have a very important role in every organization. I would like to once again thank SAP India for this opportunity to share my thoughts with you today. A good day. I would like to hand over now to Keval. Thank you.
Thank you, Ramakrishnan sir. It's always a pleasure listening to you. Hi everyone, my name is Keval Shah and I head the Digital Transformation Office for Finance and Risk in India. I'll talk about some of the challenges that our customers are facing and how they are going about weathering the current storm and actually adjusting to the new normal. And there are three key questions that every customer is trying to answer, and it's a part of doing an impact analysis and responding to it. That's what most of the customers are trying to do today. Ask these three questions, understand the impact, and respond to it. First is, are we safe? Are we resilient enough? One of the key things for a business to be resilient is to understand the cash situation. What is the cash on hand? What is my cash position? What are the inflows and outflows that are going to be in the near term? And really identify the gaps that might be there. So this is the first question that our customers are asking. Second is, how much do we actually need? If there is a gap, how are we going to fix it? What are the banking relationships that we have? What are the credit lines that we have? What can we leverage? Who can help us? Can we renegotiate with our customers or vendors and really plan the liquidity situation going forward? So first is to do an impact analysis, and second is to respond. And the third question that everybody is asking is that, what's the plan? Let's say we do a scenario analysis of what are the possible scenarios. What is our mitigation plan to each of those scenarios? How do we prioritize some of the spend, some of the budgets that we have? That's the third question that customers are trying to answer. And we are helping them with that. And let's talk about cash flow and liquidity gap. How are we addressing that situation? The first thing and foremost is visibility into the cash situation. So to understand what are my inflows and outflows, what are my sources of cash coming in, whether they are forex cash flows. If they are forex cash flows, how are they getting impacted with the forex volatility? If they are from retail customers, then what are the type of those customers? Are we actually, do we have an e-commerce in place? Are we going to actually have cash flows from there? Because customers might not be able to actually visit stores. What is my commitment to my vendors, right? What is it that what are the vendors that I absolutely need to pay to continue my operations? What is my liability to my employees? How do I pay them? These are important questions, right? And whether there are going to be any kind of visibility issues with the current position that you are in is something that we have addressed for our customers. So based on the system data, you can actually analyze your cash positions. So we'll come to that. Second is question that begs is what is the impact? Can I simulate the impacts? If I renegotiate, what would be my liquidity plan going to look like? If I bring in more debt with, let's say, a given interest rate, what is my liquidity situation is going to look like? If forex rates go up or down, what are my cash flows going to look like? So these are simulations which the customers are expecting to understand what their liquidity plan should be, right? That is the second thing that we are helping the customers with. And the third is to take action, to stop that payment, to reverse that hedge, to draw on that credit line. How can you do that with automation, integration in a matter of seconds and in a matter of minutes rather than days, right? That's where the integration and the automation aspect comes into it. So visibility, doing the impact analysis, and actionizing it all through a single system is what we are looking at. So how have we helped the customers? We have liquidity dashboards, which kind of visualize the entire liquidity situation, the banking relationships, uh, ability to predict the cash flows based on the order inflows, the order data that is already in there, the procurement that you have already put in, the bills that you have received, the invoices that you have received, the bills that you have sent out to the customers, the payment terms that you have with these customers. Based on all of that data, based on the treasury instruments that you have, borrowings that you have, culminating all of that together, what is your cash position today and 10 days down the line, 20 days down the line, 1 month down the line, based on this data, is something that is completely automated through the liquidity dashboard. Second aspect that it helps you with is to then do adjustments to that forecast based on market situation, based on negotiations, based on some of the action that you are taking, and really give you a liquidity plan and ensure liquidity. That is the second thing that we are helping you with. The third thing is around the forex cash flows. What is at risk? Whether your hedging policy is right, right? Whether there is cash flow at risk situations. Can you run simulations and see the impact of forex volatilities? Can you run simulations on your DSO, on your working capital, and identify, let's say, some of the top customers that you need to follow up with to increase the cash flow? Some of the top suppliers that you need to renegotiate with in terms of payment terms. So that is where we are helping you with alerting, analyzing, simulating, and trying to act upon it. Right? We are also bringing in the integration and automation, wherein you can, stop a payment by sending instructions to the bank. You can reverse a hedge in your system and send that instruction to the bank instantly. You can draw on your credit line by giving a payment instruction, and that goes to the bank or to the concerned party immediately. Supply chain financing is something that we are helping the customers with. So we have multitude of I would say areas where we are helping customers like Ultratech, like Tata Steel, like who have put together these treasury processes and treasury analysis that they are leveraging in the current situation. The second aspect that we have discussed with our customers is the entire planning aspect. There is a constantly changing situation and a constant collaboration that is required across the multiple stakeholders in your business. So how do we respond in the most agile manner, to put together a plan in the most agile manner, to reconfigure and do the analysis in an agile manner? That's where constant collaboration is important. That's the first thing that we are trying to address. The second thing is analysis, multitude of analysis, uh, break-even analysis, scenario analysis, uh, KPI analysis. How are we going to reconfigure the targets? How are we margin cost analysis? What is our break-even point? What is our if there are 8 or 9 scenarios that are possible, what is our plan to respond to all of those 8 or 9 scenarios? So now you don't need just one budget, one plan, but multiple plans, right? So how do you do that is something that we are helping customers with. And the third aspect is the execution part. How are you executing on that plan, doing a variance analysis and actually being able to take a corrective action immediately as soon as you see a difference between the execution and the plan, right? Can the system alert you if there are variances? Can the system actually give you enough to take action upon, a corrective action upon? That's where we are helping the customers as well. And that's the need of the hour, to respond in the most agile manner, constantly collaborate, and have multiple plans to cater to multiple scenarios that are possible. So how do we help them? We have a collaborative enterprise planning. which allows the customer to put different plans in a collaborative manner, linked to each other, integrated to each other, so that you can plan, analyze, predict, report all in the same system and align across departments, so that you can discuss these plans live, online, interact with your counterparts, try to have private versions of the plan, discuss those private versions with other people in your team, crowdsource the plans, right? And have an enterprise wide planning engagement, such that you are able to respond and put together a plan very quickly, right? And the third aspect is the system itself, allowing you to discover new drivers, alerting you on where you are falling in terms of execution, augmenting the capabilities to have a natural interaction with the system, and have intelligence built in, so that you can so that it gives you the analysis pre-built. And it's not that something that you have to do consciously. That's where these systems are helping our customers to basically understand the data that is coming in a much better manner, align with multiple departments, and respond in the absolute fast manner that you can. So in a nutshell, we are helping our customers visualize, analyze, and respond to the situation that is there. This is a huge value for our customers and their well-being and the business's well-being. To further elaborate on how our customers are being helped or are leveraging technology to understand invisible spend, I would invite Brett Wielden to throw some light on it. Thank you so much for your time. Over to you, Brett.
Hello and welcome to the discussion. My name is Brett Weldon. I'm the APAC Regional Head of Solution Consulting for SAP Concur. Firstly, I'd like to thank you all for giving us the time today in your busy schedules. I really do appreciate it. Today, I would like to provide some insight into what the consulting team here at SAP Concur are being asked to solve in the context of spend management. Also, a little bit about what we're hearing from businesses across the APAC region, of course within India, and the fact that we are certainly hearing 3 distinct business gears. And to finish, I'll share some specific Indian market metrics we've very recently mined from the SAP Concur data warehouse. These are great because they can be used to quickly identify orders of magnitude of potential optimization. Okay, so let's talk about the 3 speeds, starting in first gear. So this is short-term normalization. For most right now, this involves stopping and acutely controlling spend. Instant cost visibility, and not the traditional weekly, fortnightly, monthly reports. We're talking about real-time targeted requirements on demand. High focus on mobile too, being able to empower information into the hands of people who manage costs on a daily basis. There is a very high focus down to a transactional level. Of course, without a digitized platform, it's very difficult to do this. Second gear. So this is a shift from those immediate needs of bunkering down and starting to look at the next level of intelligence within the business. So some examples, how can Concur, for example, support central service centers? So these are technology driven now, not business re-architecting, but businesses looking to centralize services using technology as a catalyst. Business capability with location independence. So people being able to do what they do, process what they process, irrespective of the location. There is a real scrutiny on financial operational costs. So a statistic we are hearing is that target as a percentage to annual revenue, high end 1.6%, and those that are really embracing digital technology are able and are shooting for 0.6%, so a significant cost saving and contribution to the business. And third gear, top gear, and businesses are already talking about being prepared essentially to bridge that gap from where we are now to the future. So there is a focus on resources being redeployed and repointed to revenue generation activities. So making them more efficient, activating automation, and then using these resources with retraining to be applied to revenue generation activities. Supporting sales. So those people already out there, helping them to maximize seller efficiency by keeping them out on the road, out in the field. And once again, there's a huge focus there on mobility, really stopping those people who generate revenue from having to come back to the office. There is an absolute focus on digitizing and optimizing everything that is manual. So a realization that even low-cost manual has very little resilience. So let's talk about some desired capabilities within those gears. So first gear, efficiency, optimization, control, as much spend as practical. It's very difficult when you have a manual process and the spend is diverse. A focus area is definitely pre-spend, in fact, formal pre-spend authorization. So a request process that is digitized and aligns with the acquittal process at the back end. A request process also that applies company spend policies at that time of requesting, not after the fact. Add in reconciliation with what has been paid and you start to get a great view of differences and leakage. Now is a really great time to review your spend policies and plan how you can improve, apply them. Of course, with a digitized platform, it is exceedingly easy. And maybe the last point here is mobile, mobile, mobile. So naturally enabling those mobile workers to continue to be effective out in the field. That is absolutely critical. So some of the second gears, desired capabilities, now we're looking and talking about multifunction processing staff. So those staff that are operational, not just performing one task, and doing that using spend management platforms and digitization as the catalyst. Building in process resilience and agility. So less reliance on people-centric processing and more focus on technology. A rapid technology adoption and deployment of technologies such as artificial intelligence, machine learning, but not by development, not internal development, but by acquisition. So being able to consume that really quickly and have that add value. Of course, location independence is critical. We all know that. Being able to do what you do, irrespective of where you are. And maybe the last point is projects that drive continuous improvement. So through the value you derive from those, they're self-funding, and then in the future, maybe forward seeding that next project. Top gear capabilities. So digital finance from the edge to the core, either core out or edge in. It doesn't really matter. Spinning up services just in time across that horizontal and vertical axis. So scaling up and down with volume and across that portfolio of products. That's really important. Diversity and speed is key there. Maximizing vendors' portfolios. So taking advantage of the leverage in integration, for example, that you may have already made. The other note that we are hearing is kind of agility as a culture. So the ability to digitize really fast and get to 80%. And coming from a very, very manual process and practice, there is a huge return. And then being okay with 80% as those laws of diminishing returns step in, not worrying about trying to be absolutely perfect. Virtual processing teams. So irrespective of location, again, these teams can be glued together via technology. Really hot topic, employee-initiated spend. So I just read a recent white paper from Gartner, and they essentially confirmed the top 3 categories of cost that will be returned when revenue begins: hiring, travel and expenses, employee expenses, and CapEx. And what we're hearing and seeing and being asked to help with are really kind of 2 opposing forces at play here. So we have a force which is companies constantly trying to control, rein in, manage spend. And of course, on the other side of that coin, we have vendors making it easier, more accessible for employees to spend. So what is an employee-initiated spend? Well, essentially, any spend that your employees make on behalf of the company, and they can come in the form of travel, non-travel expenses, items purchased outside those traditional purchase order processes, items paid with a corporate credit card, perhaps procurement card, virtual card, cash out of pocket. It's a very long list, and it's extremely challenging in a non-digitized environment. Now, I wanted to talk a little bit about some India market specifics here. So this information and this data comes from businesses like your own, from the conversations we have and the mining of the data that we have. So firstly, no investment without value. Value is critical. Businesses are now wanting to spend more time with the consulting team evaluating a broader value proposition. So not just efficiency, governance, compliance, etc. They are looking at more, for example, international VAT reclaim. So leveraging partners across a digital platform to go and grab and take advantage of broader value. Card programs, so taking advantage of rebates, for example. So increasing card adoption, of course, you need to have the management protocols and systems in place for that. And then building the case to digitize spend management. So we are certainly spending more time working on those economic models to do that. So we are being asked to provide more tangible, achievable savings. They must be off the back of market-specific metrics. So no averages. The data must come from businesses like the ones we are talking to. In-year self-funded, fast, strong ROI and paybacks. That's a given, really. They want projects that are not only self-funding, but forward seed funding that drive continuous innovation cycles. And scalability, so elastic computing models, really the cloud, being able to scale vertically and horizontally, as I mentioned, as the business requires. Those consumption models are critical. So I'd like to finish with a few local metrics. So as I mentioned, we've just completed a data mining exercise. This data provides really true spend insight. It's around the patterns, and of course, most importantly, it unlocks the potential value. So let's talk about duplicate invoices. Interestingly enough, in India, we see the highest rate of all markets around the world. This really highlights the need for investment into digitization, and then, of course, leveraging those inherent AI, ML technologies that a platform should have. That really helps to then identify, find, and drive out that cost leakage, those missing costs that have been costing your business. Card programs. Now, this is a topic that comes up in most conversations, and there is huge value in a well-structured card program. An example, typically invisible to businesses, duplicate expenses, transactions. We see rates from about 1 to 2.2%. However, where there is low card adoption, a low card adoption situation, that percentage can triple, and that is significant. Cards will certainly increase your liability insight. Detail and speed, card transactions flow in daily, and they provide a higher quality of data, which in turn, of course, provides accurate transaction matching, reconciliation to pre-spend requests, to receipts, and ultimately increases transaction validity. Okay, I'd like to finish with a quick summary. So firstly, digitize your spend platform. Know what, when, where, and how you spend before, during, and after it's spent. Drive change. Now you have unlocked spend visibility. Drive governance, optimization, compliance via that platform. Take advantage of the speed for change digital promotes. And thirdly, build business robustness and resilience. This is really critical. Moving forward, take advantage of the efficiencies the digital spend platform unlocks and drive continuous business improvement and capability. So last slide, and just to thank you, I'd like to now invite Bill Cant from HDFC Bank to talk about the unique business-focused spend management offering SAP Concur and HDFC Bank have partnered to bring to your market. Now, I won't steal any more of Bill Cant's thunder, and we'll invite him to tell you all about it. Once again, thank you for listening. I really appreciate it.
Thank you, Brett. And I must congratulate SAP Concur for organizing this thoughtful virtual event. Over the last few decades, the global economy has evolved at a rapid pace. To sustain the same momentum and grow exponentially at speed, we must move towards adapting advanced and convenient methods of functioning. Corporates with high growth plans realize the value of digitalization and the right methods of cost control. Once the current situation improves, we look forward to emerging stronger and serving as a springboard for the revival of business sentiments. Yet, at the same time, economic pressures will force us to focus on trimming cost, releasing trapped liquidity, and tightening working capital in order to boost profitability. More than before, it is now we feel a stronger need to connect with all of you and share how a new emerging trend of commercial card usage as a preferred payment method will help you overcome these challenges. HDFC Bank, on its commercial card platform, annually processes 50,000 crores of direct and indirect expenses for over 20,000 corporates and a million plus SMEs. Our aim is to provide our current and future clients with a broad range of perspectives and thoughtful analysis of emerging best practices, which we see as adding measurable value to them, and perhaps more importantly, to provide collection of viewpoints that puts these trends into a broader and more strategic context. Our clients operating across length and breadth of India have often shared two common challenges which significantly impact their use of payment methods and of their vendors. First, initiatives to increase working capital by extending DPO, days payable outstanding, and at the same time meeting suppliers' need. Secondly, improving rates of straight-through reconciliation in account receivables and help reduce DSOs, daily sales outstanding. Over the next 5 minutes, we will briefly discuss how a new trend of commercial card usage as a preferred payment method will help you address these. With case in point, first on account payable. Almost all of our clients unanimously revealed that there is a significant improvement needed in managing direct and, more importantly, indirect expenses, especially in those where automation of the payment process is limited and its integration with the ERP system had not happened. Reluctance to change may have arisen due to centralization of account payable process, with staff dedicated full time to the task of processing payments. As a result, there may have been limited consideration of alternatives. That being said, there is always a focus on increasing their DPOs wherever possible. DPOs varied greatly between the companies and vendors, with a range between 7 days to 120 days. However, the average appeared to be 30 to 45 days, which is where a commercial card solution rightly fits in. Every company, and more so in current times, is looking to build platforms that can bring together every source, every category of vendor payment and getting a unified view. Instead of managing travel and entertainment expenses, decentralized business expenses, and supplier payments in separate silos with separate systems. Given that travel and entertainment expenses can account for a significant proportion of a company's budget, it is not surprising that many companies in India are now shunning papers or spreadsheets based expense management system for the automation with underlying payment methods like corporate cards. Besides convenience on payments, companies also welcome the greater control over employees' expenses and the relief from handling petty cash. Thus, we at HDFC Bank joined forces with SAP Concur, the world's leading brand in travel and expense management, to bring our corporate customers the most comprehensive business payment and spend management solution. This will be a very effective tool for the organization in managing and controlling travel and entertainment related expense, reducing cash advances and providing travelers with an easy, fast and safe method of capturing spends and payments. The organizations can also integrate card transaction data into internal MISs, expense reporting and account payable, and simultaneously benefit from credit it offers in extending DPO. Similarly, on vendor payments, our collective experience with our clients has been that most of them have more suppliers than their employees. 80% of the order value is from 20% of the large suppliers, where they have a negotiated terms for procurement. However, the biggest challenge for them is to manage these 80% of the suppliers that are high on volume and low on value, and are often decentralized in nature. Often an organization spends a lot of time, rightly so, focusing on large suppliers, reviewing them and negotiating multiple times. The actual problem starts after a few years when the tangibility of saving from these vendors dries up. Hence, companies are looking to find newer ways and automating, integrating all these small vendors onto a platform with the underlying payment method of purchase card that can provide them data of all suppliers, which then can be leveraged on pooling all the small spends into a fund with a fewer suppliers. Increasing leverage on the pricing that can potentially offer 20 to 30% of saving on unmanaged, non-negotiated, maybe one-time expenses, and also at the same time benefit from credit it offers in extending DPOs. Secondly and final, account receivables. This is relatively a new trend evolving in India, as more and more corporates have started enabling acceptance of commercial card towards their payment receivables. Our interaction with clients revealed the need of straight-through reconciliation that influenced acceptance of commercial cards, and additionally helping vendors get favorable credit terms on commercial cards. While rate of financial reconciliation, which focuses on net credit and debit movements across the accounts from bank statements, is high, the biggest challenge for the corporates have been operational reconciliation of collection generated by order to cash cycle of the business. It was reported that auto reconciliation rates in this category ranged from 15% to 30%, which then requires significant manual intervention to complete the task. For the majority of our clients, 90% of the payments they receive are made by direct deposits. However, with direct entry, the remitter behavior is key, and companies which look to improve straight-through reconciliation have to invest in educating their remitters on what information and references should accompany payments. Additionally, clients have also highlighted that often vendors send partial payments or pay on account periodically rather than paying against each individual invoices. This leads to additional time and effort spent reconciling a single payment against multiple invoices, as automatically matching against invoice amounts in these cases is typically not possible and therefore requires manual intervention. Our clients are continuously engaging with us to address these concerns through acceptance of purchase cards that offers high rate of operational reconciliation. Payments can be triggered against each invoice with unlimited data field to capture all the information and references accompanying payments to improve accuracy of data. Hence, to conclude the session, a new trend on usage of commercial cards for B2B payments is not only improving straight-through reconciliation rates, but will also yield process efficiencies. At the same time, helping business manage working capital through extended DPOs with improved terms to their suppliers and reducing DSOs with freeing up vendors' credit lines. Thank you so much for your time today. It has been my pleasure to be a part of this session. I would now like to invite Venkata Subramaniam Srinivasan, Director, Value Management at SAP Ariba. He will be presenting on opportunities for CFOs to plug cost leakage and create value. Over to you, Venkat.
Thank you, Neelkant and Brett, for that wonderful session on expense management. Good morning, one and all. Today, I'm going to be speaking about how we can help in plugging cost leakages and creating value, especially for the materials and the services spent. With the changing times, let's look at some of those factors which are there. Recently, there was a survey that was done around impact on businesses due to the secondary crisis such as COVID-19. The top two factors were financial and liquidity issues. And the second one was pretty interesting one, competitive disruption. In fact, to that effect, a few days back, Amway was in news announcing, say, they are moving from a high-touch to a high-tech organization. So this means each and every one is looking at how do they re-innovate themselves. In addition to these, if we look at the regulatory changes that have been there in the market, the top one is on the definition of MSME change that happened a few days back. And the second one is around e-invoicing, which the government announced a few months back and hopefully will be rolled out in the coming months. Dwelling a little deep into the MSME environment and what does it mean from business point of view. So if you look at today's situation, there are close to 6.6 crore MSMEs, out of which around 60 lakhs are registered on the GST side, and close to 3 to 3.5 lakhs of them into the manufacturing side of business as medium-sized businesses. With the change in definitions, you're going to have more MSMEs who are going to be there in the registered side, especially because of the schemes as well. If you have to be part of the schemes, you have to come into it. And additionally, with the definition changes, the number of MSMEs are going to increase. So this is the results of this are going to be also seen in customers' books in terms of their suppliers. The number of MSME suppliers are going to increase in most of the industries. Already, we have seen the regulation around the payment to be made to these suppliers. There's a 45 days regulatory, it's there. So this would mean in terms of the number of suppliers whom you have to make these payments within 45 days are going to increase. And the second one is especially the requirement of liquidity and ongoing rotation of capital being key for these sectors. When it comes to some of them who are strategic or key suppliers for you, example, someone who is providing a tooling kit, which is an important thing in your factory, then in order to mitigate the risk around these, you need to make sure you work pretty closely with those MSMEs to understand the business situations and positions as well. Moving on to the dynamics of the changing environment, what does it mean from day-to-day requirements? There's a lot more collaboration that is needed between the organization as well as suppliers, as well and also the internal departments, be it finance, be it procurement, be it planning, the project teams involved, especially with work from home still continuing in some of those areas and some of those businesses, and looks like for a few months it's going to be there. This is going to be all the more important. The demand and the supply fluctuations, how do you kind of manage it? Certain things are going to be short-term in nature as well. Doing a lot more work with lesser resources in terms of improving efficiencies in certain areas are going to become a norm. And more importantly, on the budgets, with say tighter budgets that are going to be there due to changing business environments, it's going to be important to make sure you use those budgets in the right direction, be it in terms of innovations, disruptive thinking there, as well as continuity of business. And in addition to those few points around How do you make sure you optimize your payment strategies? Everyone is speaking about cash flow today, but while you do that, make sure you look at those supplier positions as well as your brand value. In fact, there was a recent interesting article on how Panasonic has been doing it and did it during the crisis times. Last but not the least, while all these are taken care and the business runs, the complete audit trail, insights and information available to make sure you are compliant, there aren't any misuse of funds or issues in the way things have been carried out. Moving on to how SAP Ariba can help your organization. There are three key areas where we believe we can provide value. The first one is around the cost control and compliance and how we can help you optimize, maximize your returns as well as reduce your cycle times on the process. The second one is around the vendor collaboration bit of it across the complete cycle, starting from the requirement to selection of suppliers, the contracting bit, to the downstream of the procure to pay operations, including collaboration with various internal parties. And the last one is around the working capital optimization, which has two aspects to it. One is around the discounting piece, how you can do dynamic discounting in addition to discounting terms of contracts itself. And the second one is supply chain finance to support some of your key suppliers who may be in need of cash while you may have challenges in paying them in advance or earlier. I'm going to take some examples for each of them to help you understand how we have been helping organizations. The first one is around cost control and compliance. There's a leading metal mining organization in India who is one of our customers. When they started the journey, they were looking for something to help them in cost optimization as well as bring in compliance and visibility in their business. So a lot of activities and actions that were done before between various parties, be it those people who are there at different sites of the mines or at the factory sites, as well as corporate procurement, finance, everything, most of them were through email channels, especially during the supply selection and the contract closure. Additionally, the communications with supplier, most often than not, were either emails from individual mailboxes or informal conversations over phone. That's where we help them redesign the approach and the strategy. We help them make sure their whole project management required for the big projects are taken care on a system, and all the collaboration relating to that, including activities, who's responsible, the timelines, and the documents associated with it are fully available in a single point and can be available for future use as well. In addition to that, during the sourcing events, how can you introduce new suppliers to bring in competition? In certain cases, to avoid risk, how can you also have new suppliers being brought in? Most importantly, after those events are done, when you've got a recording of information and insights over a period of time, what kind of analytics can be brought in? The data insights that can show whether the events were run with the right set of suppliers, whether certain things could have been done better, also for future planning in terms of introducing the right set of supplies and suppliers. So that's where the whole analytics piece helps. So the customer has been able to get almost like 5 to 10% average savings on most of the categories, in addition to the bigger aspect around visibility. In fact, their average savings has been around 8%. Moving on to the next one, on the vendor collaboration aspect. We spoke about this even when we were discussing about the change in the MSME sector. So I'm going to take an example of a customer who is a multinational conglomerate based out of India. They are into multiple businesses. They have successfully set up a shared service center for finance quite a few years back. It's been running fantastically well. So the invoices come into here, then the scanning of those invoices happen. Post the scanning, the organization starts to do the processing agents take care of those invoice processing, and then wherever there are issues, they then work with various business units of the conglomerate to get those issues rectified. And in some cases, if it's a supplier issue, work with the supplier separately. And then after the invoice is processed, it goes through the necessary approval before being ready for payment. With the COVID-19 situation that happened a few months back, the biggest challenge that they faced was, how do I process such invoices? Where do those invoices go to? How can those be available for people to be taken up remotely for working because people were not there in office? Additionally, even scanning of papers was becoming difficult, especially when news was spreading around how COVID can be passed on between people. So with these challenges, they wanted to relook at their strategy. How can they do things better and also more efficiently? And that's where we've been working with them to enable them to have that synchronized and collaborated process across the procure-to-pay operations, especially for the finance team with the suppliers. And at the same time, when the suppliers are digitally submitting those invoices, the insights and the rules that are there in the network to take care of all those match elements so that the exception handling can be reduced considerably and the first pass invoices can increase. This will result in a efficiency of people and more importantly, invoices being available, processed faster and available for payment on time. So the customer is also relooking at whether to look at say discount-based payments so that that can be a value add to be brought in this whole scenario. In fact, in one of those other examples of a customer, they made their whole accounts payable shared service center into a profit center through this whole aspect because there were enough invoices available and completed on time, due to which they were able to go back to the suppliers for discounted payment terms. So what a network provides here is that whole collaborative platform, visibility in this whole approach end-to-end, making sure the right conditions are being put in there, the intelligence brought in on that so that the verification match can be taken care. And 4, supplier gets visibility on his invoices and where things are. So that's where the whole vendor collaboration is going to be a game changer, especially with the e-invoicing world as well. Moving on to the third one, which is around the cash flow management and the working capital management. Here I want to speak about an example of a pharma organization. They were looking at approach of how can they optimize their cash flow. So standardization of payment terms of one of those things which they looked at, but they wanted to go beyond that. How can they get value out of it? And that's where the whole thing, the concept of dynamic discounting helped them. We helped them in designing the approach of who are those suppliers, what kind of segmentation can be done to look at for those dynamic discounting, prioritize those even in the invoice processing for the cycle. And overall, they've been able to get an average annual savings of 25 crores plus the last 3 years. In addition to the value of this 25 crores, what is done is also the supplier relationship. It's kind of improved that supplier relationship quite a bit. That's shown up in their supplier service. The main reason for this is the visibility that the suppliers get. And automatically the suppliers have been able to decide if there are requirements of funds on their side and they have certain invoices which are ready for payment. They're able to go onto the platform and put in what is it they're ready for from a discount perspective. So that's where the whole concept of dynamic discounting comes in to add value. It is not that every supplier can be covered to this. And you may not have the real cash flow to take care of some of those big suppliers too, who may be in need of money. And that's where a combination of supply chain finance and dynamic discounting comes in. In terms of supply chain finance, we do have our collaboration with Standard Chartered Bank. So what we do as service together is not just provide a technology solution or the service. We also help customers to design this whole approach and make sure the value hits customers much. To sum it all, cost control and compliance, the whole thing around the collaboration with vendors, as well as the working capital optimization, all the three of them are key things, even from short term, near term, as well as long term, in the change the business are going to see. Thank you, all of you. Now I'm going to request Abhishek Ghosh to speak a few words about what the PwC has been seeing with customers during this COVID scenario.
Thanks, Venkat. Hi, everyone. Hope everyone is safe and doing well. The last couple of months have been extremely turbulent for all of us. While there is no definite end to it, at least till now, most of the countries across the globe are planning to come back to this new normal. Similarly, industries across the globe are also planning to restart their operations for obvious reasons. Now, there will be several important considerations while planning to restart your complete operations. There's some of the key decisions which have to be taken before planning to restart your operation once again and come back strong in that. One of the key aspects will be when to bring back your people. Not only that, what kind of safe environment the leaders can provide to their employees, their customers, all their business partners is going to be quite relevant during this time. The other important aspect is about planning for innovative solutions, which will cut across some of the important parameters or functions, I would say, like your sales, customer and trade, your supply chain operations, your human resources, technology, and most importantly, the finance. Now, while planning for different kind of innovative solutions across all these functions, there are some important questions we should be asked. Whether you can meet the customer expectation or not. There will be apprehensions around revenue and margin. There are concerns around CapEx investment as well. While business leaders and CFOs are quite confident that the investment around research and development and the digital transformation and automation areas will be very minimal. And that gives us an idea of the importance of automation and newer solutions which are going on in the minds of the business leaders. When we ask this question to the CFOs across the globe about their ability, about their company's ability to respond to the current situation, whether they will be able to meet customers' safety expectation, retaining people, provide the safe environment to their employees, so on and so forth. The response was quite positive, and everybody seems to be quite positive in their response. in coming back to the operations strongly. The other important aspect, which is the supply chain operations. When we speak to the business leaders and CFOs across the globe, we found the focus is more around the spend. While planning for optimization into the cost part or the liquidity, as Venkat was mentioning, there are some of the key strategic elements which has to be considered while planning for the overall supply chain strategy. First of all, alternate or additional source of supply. How businesses are ready in that part. Secondly, the financial and operational health of your suppliers. How much the companies are aware of that. Next is the contractual obligations. What kind of commitments are there into the existing contracts? How you can renegotiate those? How you can best leverage those? How much protection do you have? And in all these aspects, while talking to the CFOs, we found that automation is going to play a very important role. Like for source for supply, be it additional or alternate source of supply, what kind of data you are available at this point of time? How much you are accessing that data? That is going to help you in planning for that alternate or additional source of supply, which is the plan B for you. That gives us another opportunity on the cost leakage part also, to look at the cost leakage part. So data is becoming very, very important during this period of time. Structured data which can help you in taking the right decision in a quick manner. Similarly, on the supplier health side, in a globalized supply chain, the major issue is one part of the supply chain getting affected can cause an overall disruption of the overall supply chain. So it's very important to understand the supplier health. Real-time data, right data is going to be extremely important to do that analysis. Coming to the contractual part, how much information is available readily to you? How much digitization of the contracts are there today with you? So these will help you in taking right decisions, having the right kind of conversation with your suppliers. You can evaluate the kind of flexibility that is there for you. How much downside protection is there for you? That is also going to be important. Now, all these parameters lead to one single agenda, which is the automation or digitization of the supply chain operations. The more you have a digitized environment in your supply chain, the more you have access to right and real-time data. And that will eventually help you in taking the right decision during this crisis time. With this, we are entering into a new target operating model, which will be very relevant in this new normal. We believe that sustainability will remain very high in the leaders' agenda. Couple of other points like agility, and entrepreneurial mindset, along with collaborative approach, is going to be the mantra for success in the coming days. With that, I'll conclude it today. Thank you and stay healthy.
Thank you so much, Abhishek, for your insights. I would now like to introduce Mr. Rohit Bagade, Chief Financial Officer at SAP India, who's graciously agreed to moderate the panel discussion for us today and will be introducing the rest of our esteemed panelists. Over to you, Rohit.
Perfect. Thanks, Prabhjot. Good afternoon. Are you able to hear me loud and clear?
Yes, we are.
Yeah.
Perfect. So again, thanks a lot. Welcome, everyone. Good afternoon. I hope you are all having a great summit. Welcome to the panel discussion. The topic for today is adding intelligence to spend management for a holistic view and great employee experience. We have a wonderful panel assembled here. We are delighted to have 4 esteemed panelists to discuss today's topic with me. Let me introduce them one by one. We have Mr. Nitin Parekh, who is the CFO of Zydus Cadila. We have Mr. John Mulhall, CFO of Tata Chemicals. Mr. Lakshmi Narayan Achar, Head Planning and Cost Management at ICICI Bank. And Mr. Krishnan Ramachandran, Senior Vice President F&A and India CFO of Hinduja Global Solutions. So thank you for joining us for this panel discussion, and thanks a lot, panelists, for giving your valuable time. Finance leaders have historically been seen as stewards of a company's financial reporting and forecast. While these are very important for today's CFO, CFOs are also expected to work more closely with the company's leadership team in developing and implementing strategies for success based on data that today's technology provides. As I say, there is a short-term, medium-term, and a long-term strategy. And this is like playing a cricket match when you play T20, one-day international, and test match cricket. In the current uncertain situation, the CFO's ability to impact company's operation gives them a key decision-making role. This creates an opportunity to support infusing innovation and insight into the company's DNA to support the new requirements of today. As companies place finance at the center of their operations, CFOs have an opportunity to contribute to shifting companies' culture towards a more agile model. So, when finance leaders like you and me transform the way you run finance, you transform the way you run the business. The digital economy, as we call it, is basically connecting the 3 I's, as I call it today: individuals, industries, and information. It allows us to reshape every facet of our business and expand our impact in the world. But in doing so, it's driving businesses to ask financial leaders like you to support business-wide needs like greater efficiency, total visibility, and maximum control of risk. And of course, finance leaders are looking for solutions to support and enhance core business functions while meeting critical data and compliance requirement. So intelligent spend management should take a front seat in today's business landscape and any conversation. And every CFO today is looking at a solution that, number one, can scale as the business grows. Number two is something which is easy to implement and support and which integrates with the existing solutions. Number three, provides best-in-class experiences, which is either a user experience or an employee experience. And number four, last but not the least, helping in building financial resilience to weather uncertainty. With this background, let me get the ball rolling. Let me start the panel discussion. My first question is to Mr. Nitin Parekh, CFO of Zydus Cadila. Mr. Nitin, welcome to the panel discussion. The question to you is, hi, good afternoon. Today, business world over are battling the impact of global pandemic. And the biggest questions that stare in our face is, how do we ensure business continuity in the time of crisis? My question to you is, what kind of scenario planning are you doing to assess the impact on your business?
So the business continuity, I think, is anyway primary role of CFOs, and that's the basic role. Nothing much changing. However, what is changing as of now is the focus part of that. So the focus right now, if I talk from Zydus angle, is to preserve the liquidity, manage and control cost, and sustain business operations. We being a pharma company, we are fortunate that we are covered in the essential, drugs, and therefore, we are in a position to continue the operations during lockdown also. But it's not very easy to continue the operations, when there are a lot of other restrictions around. So we are trying to handle this situation currently in terms of the continuity to ensure that we take care of the safety of our employees, whether it is in terms of insurance to be taken, in terms of the movement, sanitization, safety measures, checks, when they enter the office, etc. We are also trying to handle in terms of the manufacturing operations the continuity of supply. We are looking at strengthening the supply chain, also helping the certain suppliers, especially the focus is on MSME suppliers in terms of supplier financing, supplier help, even advance given to certain suppliers for the materials. Extending credit to the customers wherever required, so that the business continuity gets ensured, and they may be facing some problem in terms of the recovery from markets, helping them in terms of continuity of business, and thereby maintaining the entire value addition. The focus also comes in terms of day-to-day management of liquidity. So with that too, we have been doing this on a monthly basis. The cash flow planning is done on a monthly basis. The forecast is done on a monthly basis. The scenario analysis now works more effectively and more minutely, in that sense that while there is a 3 months, let's say, rolling forecast of revenues, cost, and cash flow, what is additional today is that this is converted into monthly and then weekly. We run scenarios like what is the optimistic scenario, realistic scenario, also pessimistic scenario. We work on sensitivity of different assumptions. For example, currently we have come out with a cash discount scheme. So we run the scenario: how many percentage of my customers will avail cash discount scheme? How many of customers would like to go for extended credit? And since we operate in different geographies and different markets with different set of customers, like institutional customers, retail customers, wholesalers, we also decide that in X particular geography for Y set of customer, if there can be Z number of days of delay in terms of collection, what does it mean in terms of sensitivity? So this is done. While sensitivity is nothing new, what is currently being done is monitoring this on a daily basis. And then we have established liquidity management office, whereby all these forecasts are covered into weekly forecasts, and there is a daily cash position report which goes in a summarized fashion. Also weekly updates are sent to the management. So there's a complete control in terms of liquidity.
Thanks, Nitin. As it said, cash is the king, and I'm sure you are focusing on the right areas at this point in time. All right, so let me bring in John into this discussion. So John, the next question to you is, what are some of the challenges that the finance function is facing today with respect to spend management, and how are you as finance leader gearing up to address and overcome them?
I think you've hit the nail on the head on the introduction. Cash is king, and it will be king for the next couple of years. An immediate focus is required, starting really with the short-term cash flow. And then Nitin mentioned it. We're looking at a standard rolling 13-week, weekly-based cash flow at a CGU or unit divisional level. Every single weekly collection and major payment gets reviewed against budget and against prior year to establish any patterns that are in or out of sequence. What are we spending today? And can you stop it or can you reduce it? What commitments have you made, and what options do you have to mitigate or defer that expenditure? And if you do that, can you quantify the effect on your future plans? You have to be able to do this today. Are your suppliers still viable? Who owes your money and how quickly can they pay? Are they still viable customers in the future? And is your credit management policy still appropriate? And how are you communicating with the late payers? From your internal processes, how frequently are you clearing bank reconciliations? You can't wait for month end now. These are daily processes that you can manage, and the hygiene is incredibly important today. Looking at your purchase order spending authorities, do you have daily reports of what has been spent, how it's been ordered? Do you want to remove the authority for high ticket purchase orders? But then you're trading off efficiency against control. Again, something to manage. Are you capable of managing that level of detail at your position? So that's your internal side. From the external pieces, can you draw down on any existing finance facilities? With new facilities, you're probably looking at 4 to 8 weeks credit clearance. So what can you access immediately? Now, what government options are available? International governments, the UK, the US are offering loans or other finance facilities. RBI is doing something similar for the banks in India. And also, how can you bring channel financing in to support your customers and your suppliers to make them viable on a long-term basis? And then you bring these two together and you try and make a day job. Once you've established the basics, how do you automate these? How do you regularize these very, very manually intensive programs that you're implementing? Customer supplier monitoring, cash monitoring, purchase order policy and credit policy adherence. How do you make sure you're catching these as an early warning of potential problems coming up? How do you bring in real-time analytics and policy control into your system, which we discussed earlier in the session? And finally, this should not be a surprise to any finance group. This is what we do normally. It's just perhaps the level of intensity that we have today, and also the attention of the board. So there's an opportunity to get backing for investments in your systems. Today's the day to go ahead and go with that. Thanks.
Perfect. Thank you, John. I could capture most of the points that you mentioned. You mentioned about cash flow management, visibility, liquidity, cost control, supplier risk, data integration, policy adherence, audit, etc. And believe me, I think very consistent theme across most of the companies who are navigating their way through this pandemic. Which brings me to a very important point. I think there are 4 things that we can do as part of spend management process in terms of how do we make it more efficient and effective. One is basically employing a nimble approach to managing data, embedding intelligence from end to end, connecting across the business and not having a siloed approach, capturing data beyond the 4 walls. So we also are very much required to look at the supplier profile, the banks, the third parties, etc., and easily adding extension and enhancement. So again, thanks for sharing your perspective. Krishnan, let me get you in on the next one. How are you fulfilling the risk, compliance, and sustainability charter of your business?
The ability to track and verify spends, to exercise controls while providing flexibility, be it to vendors or to employees, the ability to manage unplanned spends, and also the ability to adhere to quick reactions to settle demands. I think these are the key in the process of fulfilling risk and compliance. Adding intelligence to our systems also help identify behavioral change. We keep learning a lot of good practices, but at the same time, it also helps in tracking unethical behavior, fraud or misuse. Integrated solutions with high level of automation across cycles like P2P, advances or loans, expense reimbursement, help maintain sanity. The ability to follow traditional methods in spend management may not be feasible in many situations. For example, we used to insist on physical copy of invoices for various reasons, but now we have to process them with soft copies. Having an electronic method of doing it with a workflow helps tracking it with a lot of ease. One can define exceptions within the system. There will be more exceptional transactions to handle, and with improved documentation, instant approval requirements, an automated way obviously fulfills a lot of these. There will be growing demand to exercise more controls, internal controls on financial reporting and tracking. Automated controls versus normal controls are already in existence, and all this can be facilitated. We must also remember that government is also investing more in automation and compelling organizations to go the electronic way. In specific situations like COVID-19, it helps to identify one-time expenses. We all know that we are required to make adequate disclosures in the financials. The ability to utilize more accurate and timely report helps in making better forecast and planning well ahead. Compliance predominantly involve evidencing accuracy, and this is achieved with the ability to design the required reports. Thus, risks are identified and addressed much earlier in the game. Compliances are adequately adhered, leaving evidence of processes being adopted in executing these transactions.
Perfect. Thanks a lot, Krishnan. Lakshmi, that takes me to the next question. It will be really great to get your perspective on the same. What are some of the key benefits of having an intelligent spend management solution in place? And what are today's employees expecting when it comes to spend management? How have spend patterns changed due to COVID-19? It will be really good to get your perspective on this.
Sure. Thanks for having me here. Like say, as some of the concepts in your panelists mentioned, cash is king. One similar concept here would be income is uncertain and expenditure is definitely a certainty. What I mean to say is that in every organization, expenditure is one aspect of a financial statement in which they would be able to exercise control, whereas other financial parameters like say income, turnover, and similar aspects, the ability to exercise control is more so in today's scenario would be far limited. Hence, it becomes very imperative that for an organization need to have full information on its expenditure to exercise this necessary control on it. Essentially, expenses can be categorized as non-discretionary, partly discretionary, and fully discretionary. An organization would need to undertake the non-discretionary spends because it is what keeps the engine running, and that they would have a limited choice over that. Or when it comes to discretionary spends, an organization can decide, can have much more flexibility, can decide the time to spend, when to spend, how to spend. All these aspects can be decided and in a much more detailed manner exercise control. It is important to classify the expenditure accordingly because this enables to prioritize options and incur or decide where to incur or avoid spends. I believe efficient spend management solution is the key here, and which helps an organization to have full intelligent information about the expenditure, a system which tracks information from indent to payment, giving detailed information about the type of spend, the quantity, volume, value, all information available in a single place, enables an organization in facilitating decision making and in endeavor to control spend. That is where I believe the spend management solution is very important for an organization today. When it comes to employee expectation, I would say gone are the days when an employee in earlier situations would have kept track of all or expenditure they would have incurred on behalf of the organization, say travel, associated cost, put up a physical voucher, move the documents from desk to desk to get it approved. Now it is a smart and efficient way of doing things. Everything can be handled by a smartphone. Information can pass seamlessly electronically from the employee to the organization with the aid of these various solutions available. I think the benefits are twofold. One, for the organization. For the organization, what essentially happens is that now the cost of ensuring compliance would come down. Compliance can be ensured that the spends are within the framework or the internal policies of the organization and can be tracked more efficiently. And for the employee, when it comes to his experience, it's a better experience and a faster tag. And this is where I would say employee expectations towards the spend management solutions are changing. The change patterns which you mentioned in terms of the kind of expenditure which an organization would be incurring, I am pretty sure that we might see a drastic change in the way in which an organization will operate. The work from home concept will have significant bearing on various aspects. For instance, the rentals on commercial premises would be impacted. Travel and conveyance will be substantially lower. Customers opting to prefer electronic transactions will also have a significant impact on various organizations or various expenditures of an organization. So all those administrative expenditures can be expected to come down. But this would be aided by technology, and hence a shift in expenditure would move away from many of these categories, earlier categories, towards technology. Technology expenditure could be higher, which would essentially be providing efficient solutions to organization. In fact, like say, the investment in the IT infrastructure would to a great extent shrink the physical infrastructure of an organization, ensure the business continues with a better efficiency as well. My take on this is that the cost to income ratios and various other cost metrics may see a drastic improvement based on the present scenario which we are envisaging. Thanks.
Thanks, Lakshmi. My view on this is, if you look at intelligent spend management, I think it includes three capabilities, right? Number one is managing every source of employee spending. Number two is managing it across categories. And obviously the third one is bringing that data into one unified view. From a better employee experience standpoint, we keep hearing that better employee experience is good for business. And here are some of the statistics for you guys. We typically, with better employee experience, we see 17% higher productivity, 21% higher profitability, 4.3x increase in earning per share, and 24% lower employee turnover. One additional point that I just wanted to add to what you said, Lakshmi, is millennials today, who now represent the majority of workforce, are instinctively comfortable with artificial intelligence, and hence it is very important for us to use a intelligent spend management solution that really creates a better employee experience as well. With that, let me go to Nitin. Nitin, my next question is for you. The rising complexity in managing financial spend data hinders our ability to view or analyze it. In your experience, how are companies tackling or managing this challenge to ensure data-driven decision-making is supported? How are you today leveraging data to create improved spend visibility, cost controls, and of course, compliance?
So complexity of various spend management items not very easy to manage, and use of technology and tools I think is becoming must to keep track, get the visibility, and also manage and control the cost. In today's time, what we have done is to classify the expenses in terms of major items and put the priority order. For example, we have priority of payments starting with employee payments, then statutory payments, then all plant utility related payments to ensure the continuity of manufacturing operations, then payments for materials and supplies which are critical, and fifth categories are all kinds of discretionary payment, whether of revenue nature or capital nature, but which are of must to have category. Now this must to have category, we have put the authorization matrix in terms of going to the MD's level as of now, and all other 4 items are at CFO's level in terms of management. All the expenses paid by different business entities across the globe need to be reported on a daily basis under this particular matrix. So that is helping us in terms of visibility and control. I think this pandemic has given a golden opportunity to revisit the cost and really experience what zero-based budgeting is. That you say there is a zero budget for, let's say, office travel. Now all of us have been talking about zero-based budget, and I think while the concept is very good, implementation has its own challenges. But I think we have got this opportunity where we are now really experiencing what zero-based budgeting is, and then if we can make it as a part of our DNA of the organization, I think that will be very good way of managing this. In terms of managing this complexity, what we are doing, there is a plan in terms of the forecast that we get of cash inflows. Based on that, we give the visibility to our spend department in terms of what is the funds which will be made available during this particular month. We also run, as I mentioned earlier, we also run the sensitivity, and therefore we give the range of values that you will get, let's say, in this particular month, 300 to 400 crore rupees, for suppliers of material and services. That's the visibility part. But then we work on a week to week basis. So actual inflow of first week gets utilized for disbursement in week 2, inflow of week 2 utilized for outflow of week 3. Therefore, while there is a visibility and there is a control, both we are trying to achieve. So the visibility is a total level, but actual disbursement and commitment takes place based the actual collections which you have done. And this information getting monitored on a daily basis, is what gives us, power in terms of management. We also use SAP's funds management module. We are very strong in terms of budgetary control. So not only the payment cannot be made, the commitment can itself not be given unless it is first cleared through funds management module. So that's the power of SAP which you are utilizing. And in terms of various supplier and cost control, we are also utilizing SAP Ariba, which gives a lot of benefits in terms of management and getting the suppliers at the right price. Also running reverse auction and other tools given by SAP Ariba.
Thank you, Nitin. I must add that, and it is pretty fascinating, a single invoice is actually supported by 15 people on its journey. And 63% of finance leaders say that they have received duplicate invoices, and 33% of them actually say that they have ended up paying it more than once, right? So by automating the overall invoicing process, you not only reduce the risk of paying in error, but it also ensures that there is higher compliance, and you're also spotting fraudulent transactions as well. So again, thanks for sharing your perspective. Krishnan, I'll be really interested in getting your point of view on the next question. What role has technology like machine learning and artificial intelligence played for finance leaders? If you can give some examples on how these technologies are helping in enhancing employee experience as well as improving productivity, that would be great.
Technology has always been an enabler to manage business. But with the advent of machine learning and artificial intelligence, it provides a fantastic opportunity to scale. Artificial intelligence has given the ability to make automated real-time decisions and respond instantly. It has especially shortened the time taken to process large volumes of data, and also helps in identifying varied patterns of usage. Some of the examples could be mobile enablement of employee-related transactions with finance. Banking has changed so much that some of the millennials probably have never visited a bank. Payment gateways have changed the way we think about financial transactions. Business have started to extend their arms to control the finance cycle. Already multiple systems are talking to each other in deciding the action on various guidelines and parameters. Artificial intelligence and machine learning are deployed on transactions in O2C, P2P, employee spends, general ledger entries, cost allocations, compliances, and MIS reports. It has, in fact, added in improving intelligent forecasting and designing accurate and timely reports. One of the key activities in the finance organization is to leave an evidence of transactions or processes. And one of the struggles the finance folks face is an important activity called reconciliation. One of my earlier mentors defined reconciliation as walking from point A to point B without knowing the path that was walked and then struggling to trace it back. Automation has eliminated reconciliations in many areas. It has reduced transactional entries, resulted in more accurate and timely reports. Accurate forecast and better decision making is facilitated. So now the question is, how are employees, what is the experience of employees? Employees who are part of the finance organization have lesser hassles in recording transactions or preparing reconciliations or leaving adequate evidence. Therefore, they are now involved in brainstorming and decision-making activities. They experience the satisfaction of having grown in their jobs. They also carry a wow feeling that they are part of the progress in technology, and work has suddenly become more interesting. Employees who are customers to the finance team have experienced faster responses and turnaround time. simple processes to follow. The general experience has significantly gone up, and they feel that they're treated better by the finance team, and that's an important feeling. It has improved the ICSAT scores significantly for the finance team as such.
Perfect. Thanks a lot. Lakshmi, anything that you would like to add to what Krishnan said?
3 points. I believe technology is a key influencer for finance leaders as well. These concepts like machine learning, artificial intelligence have essentially helped significantly in improving the business performance reporting and also financial reporting. Routine activities, which like Krishnan mentioned some examples of reconciliation, very similar aspects, which have been automated using robotics and machine learning, now have made resources more productive, and ample time now being available with them for facilitating business decisions, analyzing business information, and business performance. Now, I believe this has also helped in investment decisions for organization, as the ability to predict business outcomes linked to external environment has improved significantly. We are in a much more better position to take what-if scenarios with the probability of forecasting or forecasting the result to a near actual outcome kind of a scenario. Also feel that now I believe finance team has realized the potential the technology can play in the domain, and we are not leaving any stones unturned to fully leverage on this aspects. Thanks.
Perfect. Thanks, Lakshmi. John, my next question is to you. Once the lockdown is relaxed, keeping in mind the consistently changing market, environmental and locational situations, how are you looking to keep employees safe during business travel, be it local, domestic, or international?
Thanks. I don't think we'll be in a single release, but more a stage approach. So that means there'll be no pivot back to what we're doing before, no return to past behaviors immediately. And I think there'll be a near-term reluctance to travel by anyone, more about a worry about either a second wave or some other new issue that's going to arise that we just don't consider today. And we also need to consider the implications of home to work travel as well. We can look at business travel, but I think they also have to think about how do people get to the office, and will that remain appropriate going forward? How do we handle social distancing requirements and also health screening or temperature screening at the office locations? How do we handle travel on trains and buses and other public transport as well? And business travel itself will become by exception rather than by the rule, as a last resort, and only with the concurrence of the other party, because it's not just about me, it's their risks as well, and how they choose to manage how they believe their risks set out. If it's absolutely critical, then there'll be a requirement for a significant amount of pre-planning, the full understanding of what the government and company restrictions on arrival are at both sides. And we'll need appropriate insurance or physical backup measures in place to support our people when they travel. Meetings will move towards more service locations with microsites built more than the general offices themselves. And there'll be a necessity to have immediate access to transport, health, and security as well. These will be critical options of protecting our teams when they travel. But I think there's something more than that. As we move away from a focus of working from the office, how do we make sure we can still develop ourselves, our teams? How do we set objectives? How do we change processes? How do we set strategy both within the company and with our customers and suppliers as well? There's many things there that we need to think about. They'll be changing rapidly, and what we described today will not be what's going to be available in 6 months or 12 months times, as companies take opportunities to provide more solutions for us, and we can take advantage of them.
Perfect, John. Thank you for sharing your perspective. Nitin, anything else that you would like to add on top of what John said?
So far as the movement of employees within the city is concerned, I think there would be restrictions and several measures to be taken. For example, movement of people, for the purpose of meetings. I think meetings can be done on MS Team onwards, many other means. If it is to, let's say, deliver certain papers, for example, to bankers or insurance companies, there also where the signatures are required and signed papers are given, we are exploring at all possible whether the digital signatures, digitally signed papers would do rather than physically signed papers, and you can scan the papers and send them rather than sending people. So that will be one way of restricting movement within the city. When it comes to, let's say, domestic travel, the distances are not large enough. For example, it's 400 to 500 kilometers like Ahmedabad to Mumbai. Then one can think about, if it is again a must to have a personal visit, going by four-wheeler and on an individual basis rather than using any public transport, at least in the initial few months. When it comes to foreign travel, I think there is something like a temporary and permanent. Temporary in the sense that there are going to be restrictions, almost not having a foreign travel for next few months before the vaccine is found and the disease gets under control. The second part, which is a more of a permanent nature, would be that all organizations are going to look very critically whether travel in the first place is required at all, because it's a good feeling, human touch, face to face, all these aspects are there. But I think now organizations learn that many things are possible to be done even without personal meetings, and therefore I think the foreign travel as a whole is going to undergo a major change. People are going to use more and more technology means, including video conferences and other means of communication and visit, where including more sophisticated telecommunication devices, which almost give you impression that you are sitting together. Those things may be used, and that's going to change the way for foreign travel and interaction with your business associates for all times to come.
Thanks, Nitin, and completely agree with your views here. I think the way we travel and the way we look at travel is going to undergo a significant change as we look ahead. With that, we have time for only one question that we can answer from the question is posed by the audience. The question is from Avik Roy. The question is, agility in response by the finance team is key to manage the intensity with which internal and external stakeholders are expecting support from finance team. Can the panel share perspective on how the finance teams are becoming more agile? What kind of tools are being leveraged for the same? I will just open this up to the panelists. Anyone would like to take a shot at this particular question, please?
So I'll go for it. I'm audible? Yeah. So essentially, I believe,
Yes,
finance plays a key role in an organization. The role of a CFO is now all the more keenly observed, especially in today's scenario. As we mentioned, the scenarios plays out on a day-in-day basis, and in some instances on an hourly basis. How the keeps on changing. Like it is very essential that business scenarios have to be projected. Various what-if situations has to be established, and accordingly engagement with the various stakeholders of the organization need to be taken up, just to, because like say any situation how does the organization respond? So that kind of an scenarios building would be done by the finance team, by the CFO's team, and projected to their business counterparts to evolve a solution with which the organization can move forward confidently to meet any scenarios, any situations. And I think this is where the role of CFO and the finance function is more critical, especially because they have all the information, they have the ability to understand, judge where the organization will move, how the industry is responding, and all those informations they are in a position to assimilate and put it across in one seamless manner. And I think that's how the finance team can play a very important role in these scenarios.
Just to add to what Lakshmi said, basically you will see that finance organizations have sort of started imparting training on artificial intelligence, machine learning, and the methodology to adapt all of this significantly in an extended way. And that helps the finance organizations to respond to various internal customers, and also help redefine the processes to support the new way of adapting technology. So that improves both the experience for the finance team as well as for the other employees in the organization and helps the organization scale up much better and faster.
I think agility also requires
Perfect. I
one's
just have
understanding of how different businesses and different geographies function differently in terms of their culture, payment system, research system. So in one market, I'm giving credit, in other market, I'm deferring the creditors. In one market, I'm giving advances, in other market, I'm curtailing the spend. So how fast, based on information, understanding the dynamics of specific market and products, you would take timely decisions and see the impact of that.
got it. Thanks a lot. With this, thank you very much for this very interesting conversation. It was really great to get your perspective on this very important topic in my view. With that, we come to an end of this summit. Looking forward to meeting you all next time. Thank you and have a nice day. Take care.
Thank you.